According to Kitco News, billionaire investor Ray Dalio just said something that might make you look at gold in a completely different way. He called gold fundamental money, not a speculative asset. In his words, it's the money least at risk of being devalued or confiscated. And he says people should hold between 5% and 15% of their portfolio in gold, or even more during times of war and currency devaluation. And honestly, when you look at the world right now, it's hard to argue with him. Dalio explained that throughout history, there have always been two types of money: hard asset-backed money like currencies linked to gold or silver, and fiat money, which is backed by nothing but government promises. And here's the pattern. Every time a country had a currency backed by gold, it eventually hit a point where debt got too high. Leaders either stuck with the gold standard and caused deflation, or they abandoned it altogether, printed more money, and caused inflation. And after central banks were created in the early 1900s, governments almost always picked option B, print more money. That's why Dalio says every modern debt crisis has followed the same script: too much debt, too much money creation, and rising gold prices as people try to hold on to something real. In his words, in all these cases, gold did well as an alternative money to paper debt money. And that brings us to right now, because since 1971, when the US fully left the gold standard, every currency on Earth has been fiat, and history says that never ends quietly. That's why Dalio believes gold isn't just a commodity, it's the safest form of money. It can't be hacked, printed, or frozen in a bank account. You can hold it in your possession, and that gives it a kind of independence no digital asset or fiat currency can match. He even said it has lower confiscation risks than other monies and assets because it doesn't rely on someone else to pay you back for it to have value. And that's exactly why gold has been the go-to safe haven in every period of conflict or devaluation throughout history. When currencies collapse, gold doesn't go up. The paper money goes down. If you ever wanted to understand how to hold real physical gold and silver, not paper gold, not ETFs, and use it to diversify your long-term holdings, you can request your free gold and silver kit from Goldco. It's a simple guide that shows how to hold real metals as part of your broader plan for stability and growth. Dalio also pointed out something that rarely gets mentioned. Gold has a track record no other form of money can match. It's now the second largest reserve currency held by central banks worldwide, second only to the US dollar. And unlike dollars, yen, or euros, gold's value has kept pace with the cost of living for thousands of years. Dalio even said, gold has continued to be the most fundamental money over time, with the best track record of having its value keep pace with the cost of living over very long periods of time. That's the polite economist way of saying fiat currencies come and go, gold sticks around. Now, he's realistic about gold too. He's not saying it's going to shoot up every day. Over the long run, gold behaves like cash, stable, not explosive. But Dalio says that's the point. He recommends holding gold as a strategic allocation, not a market timing play. The next price spike, it's about always having some in your portfolio to balance the risk of everything else. Or as he put it, you should think of gold as being a fundamental money that you should own at least some of. Most investors don't own any. And that's why now might be the perfect time to rethink that. And Goldco is making it easier than ever. They're giving up to 10% back in bonus silver on qualified accounts. It's one of the simplest ways to strengthen your long-term holdings with something that's real, tangible, and time-tested. Now, Dalio also made one more point that's incredibly relevant to today. Gold tends to outperform during times of monetary breakdowns, debt crises, or geopolitical conflict. And let's be honest, we're checking all those boxes right now. He said that during periods of war, high debt, and inflation, gold has always gone up a lot in value. Or, more accurately, it was the money that didn't fall in value. That's not speculation. That's just gold doing what it's done for thousands of years. Okay, so here's the bottom line. Dalio's not talking about chasing the market. He's talking about building resilience. When debt rises, currencies fall, and uncertainty spreads, gold doesn't need to be exciting. It just needs to be solid. And maybe that's the real takeaway here. The world keeps reinventing money, but gold never needed an upgrade. Because real value doesn't go out of style. It just gets rediscovered every generation.